Hi trader, my name is Chris and I welcome you to the weekly recap brought to you by Admiral Markets. I'm going to take a look at what's next for the dollar and the euro on this 20th of July and take a look at these specific currency pairs. But please be aware that this video is intended for a global audience and may not be suitable for everyone. To get the corresponding info on that and conditions and details, visit admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information. This video is for informational and educational purposes only, and by continuing watching this video, you agree with this disclaimer. Alright traders, let's start with taking a look at the euro-dollar daily chart. And the euro-dollar has reached an important key level. 108.20 is the support level here on this daily chart, and also actually the weekly chart, and that is why it's so important. Last week we had a bearish candle, so there could be enough momentum here to push through that level. I so far have been actually holding on to the long-term analysis that price could get back to the 38.2 fib at 117 before descending down to the target, to parity or even below it. Now when we see this momentum, however, the turnaround here, perhaps that could change as soon as price breaks through the 108.20 with a good daily candle, for instance. So that's a key major level that I'm keeping an eye on. Will price bounce or break through this level? That is the question, and the answer to that could be on the daily chart as it approaches. I want to see a pretty good daily candle here pushing through before I consider 108.20 broken. Not some intraday wick, because that could just be a small break and the price could still return up here and retest these tops at 112, 112.50. So I'm going to keep an eye on the daily chart for that answer, how price reacts to this support level. Now moving over to the pound dollar, we see that price actually bounced at the 78.6 fib and at the trendline confluence. So that is a bullish kind of rebound with strong daily candles after that. And to me, that signals a potential for follow through on this daily chart. Now, when we then zoom into the 4-hour chart, you can see that 78.6 bounce. We see strong candles and in fact a pretty neat uptrend channel indicating a nice balance here, a good angle of this uptrend channel, and price is making kind of a consolidation within that uptrend. Now when we go to the Admiral Markets heat map, and that's a very interesting thing, you just go to the admiralmarkets.com website, hit the analytics button and you see market heat map, and that's a great thing because you can see what kind of move and volatility, basically the volatility versus the movement of each pair. And that, of course, that's great because a pair that moves a lot and has a lot of volatility is easier to trade. You can, in a way that you can catch more pips. It's trending and moving more, so there's more potential for finding some pips on the chart. And when you look at the pound on these heat maps, you just see that, you know, on average, the pound pairs are doing pretty well in their movement and volatility. So they could offer some potential there. Of course, always confirm by the strategy and methods that you use. But when we go back then to that I'm looking for a uptrend continuation of this channel, and well, price could bounce at the bottom here and eventually break through this top and head towards higher levels like 157.50 and perhaps higher. Now if it does break below this channel, then I would still use a fib from here to here and look for instance, a bounce at the 50 fib right here. Let me remove the other fib, and you can see that currently price already bounced off roughly the 38.2 zone, if I put it a bit more correctly there. So as it breaks this channel, it could bounce to 50 to 61.8 fib at around 155, 154.50-ish. So those are support levels, and this channel is a support level, and a break above resistance could lead price to go up to 157.70. Find it an interesting pair, and considering the heat that we have here, according to the heat map on the pound, something to consider as interesting when trading, and I think the pound dollar is a good example. Regarding the webinars this week, we have a great lineup. I think we have Nana taking a look at the weekly FX recap here on Monday as always. Wednesday, he's going to take a look at why traders lose in his expert opinion. Tuesday, Wednesday, we have live trading room labs, Camarilla trading on Tuesday, and Forex strategy on Wednesday, where we discuss a system in detail. And Thursday, both Nennet and myself are going to take a look at cultivating rock solid confidence when trading the Forex market. So I hope to see you in one of these webinars, or perhaps all of them. That would be great. All right, moving on to the dollar yen, we're taking a look at the sentiment trader that's part of the MT4 Supreme Edition of Admiral Markets with 50 plus features take a look at the Admiral Markets website homepage, and you'll see at the top explanation about the Supreme Edition. Definitely worth your time. You can see 57% are long on the dollar yen, so that's an interesting stats. But if I look at the dollar yen, I do have some hesitation because of this rising wedge chart pattern formation. Now, price managed to break a bit below it, but then it's retesting this top. At the moment, we've been hanging around this top for a while, so I am not too keen on longs at the moment unless it really closes with a good 4-hour candle, perhaps above this 124.20 resistance. But at the moment, I have some doubts about any long. In fact, if you look at also the daily chart, so close to this resistance level and the 125 round level. So from this point of view, I would rather wait, look for potential maybe for price to make a counter trend move to the downside, or just look for a head and shoulders pattern maybe around here, for instance, and wait for the bounce back up. So I'm a bit patient with the dollar yen, not looking really to trade it 1, 2, 3 here. I mean, there's heavy levels of resistance, so rather wait maybe for it to move back to support or a kind of a counter trend reversal trade against that momentum, as there are some signals here that momentum is dying down here on the 4-hour chart and 1 hour, so that could happen. It's a risky, of course, setup to look for when looking for a reversal because of the momentum, but perhaps a break below this. Let's take a look at the 4-hour support, 124-ish, 123.90. A good 4-hour candle close below that with the tight trail stop might be something I look for. In honesty, it's an idea that I will consider, but I'm not jumping for joy to trade it. I'll be very cautious with the dollar yen as the momentum is strong to the upside, and we'll just keep an eye on this. I like the pound dollar a lot more, and even the euro dollar is in a better situation, I think. Now, moving on to the AUD USD weekly chart, we can see the price made that fantastic break here on the weekly chart, pushing through this trend line right there. But so far, we haven't had much follow through as daily candles are becoming quite choppy. And the 4-hour chart, you can see that there was a very big zone, got a break, pullback, and continuation. But that continuation is stalling at the moment. So kind of like the dollar yen, in fact, not really jumping for joy to trade it at the moment with a pretty slow breakthrough here and not much follow through at the moment. I would not mind looking for shorts though if price retraces and shows some signs of weakness, because ultimately, of course, when looking at the daily chart here, for instance, and the weekly chart, price has that downside momentum. So as long as price stays below this 4-hour basically top or high, I do think that there's scope and space for a turnaround below it for more downside. So that's something that I might keep an eye on as it retraces and gets closer to this red line, which is about 74.35. For instance, 1 hour or 4-hour exhaustion wicks, pin bars, engulfing twins, these kind of candlestick patterns at that resistance are definitely, I think, interesting to keep an eye on for potential shorts. Well, those were just my initial ideas as the market starts. Of course, it's new week at the end of July. Keep up to date with all the information and analysis that we will be providing throughout the week to see how that perhaps changes through Admiral Markets social media. I wish you all good trading and happy hunting, and talk to you soon. Cheers.